You're welcome back. Well, oil prices slumped to their lowest in 2 weeks after official figures showed a surprise jump in U.S. inventories of crude and rising cases of COVID-19 in Europe, Russia, and some outbreaks of infection in China dented hopes for an economic recovery. Brent crude dropped by $1.58 to $83. Man, yesterday it was 85, having hit a 2-week low of $82.32 earlier and falling by 2.1% in the previous session. U.S. oil fell $1.39 to $81.27 a barrel, also a 1-week low after dropping 2.4% yesterday. Outbreaks of coronavirus infections in China and record deaths, the threat of lockdowns in Russia, along with rising cases in Western Europe, are putting the brakes on a multi-week rally in oil prices. How's this trickling down to Nigeria? We have Damilola Akimbami, Head of Research with Financial Derivatives, joining us for this conversation. Good to see you again, Damilola.
Good morning, Ini.
So I thought by now the world was, well, at least getting to live with COVID-19, so we wouldn't have cases where, for instance, I hear factories in China are being shut down because of COVID. Russia is considering lockdown. I thought with the vaccination rate and everything, we had gone past this.
Well, the world is definitely learning to cope and live with COVID right now. And the vaccine rates, we've seen an increase across a lot of countries. But bear in mind that the vaccines are not a cure to the virus. Just they help to boost your immunity and at least reduce the side effects that could occur as a result of one being infected by the virus. So that's what is happening right now with a lot of countries that are beginning to record a rise in COVID cases. And this is because a lot of these economies have reopened for business. A lot of them have relaxed on restriction measures and whatever.
So you have more interactions.
You have more interaction. But the thing is, as more people get vaccinated, you have what is called herd immunity, and that should, in a way, reduce the spread or the contagion rate. But as more countries resume and as more people go back to the offices, the workplaces, definitely there's that risk of a spread, and that has always been a major risk to the global growth forecast that by the IMF, by the World Bank, that if there's a spike in COVID cases, if there's even an emergence of a variant that is even more deadly, more severe than
I think the worst so far is Delta.
Yes, yes. So if there's a variant that is even more severe than Delta, I know we've been hearing talks about this new variant called the MU, coming up. So if you have variants coming up that actually that can resist these vaccines, then it becomes an issue. And well, what a lot of countries are doing right now and putting in place. So China, for instance, now had to shut down its factories, and China is a major global trading partner, even for Nigeria, as at second quarter, to our largest import trading partner. So whatever happens to China would affect the global economy, would also affect Nigeria. Bear in mind that China, aside from even the COVID issues, China is also facing coal and gas shortages, which definitely has led to a lot of factory owners switching to oil for power. And
which was why oil was enjoying the rally.
Exactly. And that's why we saw that rally in oil prices. So whatever happens to China definitely would have a spillover effect on the global economy.
Even the supply disruption, that has been going on in Europe, I think it's worse, also, a bit worse now for some days now.
Yes,
because
due to
of
the energy crisis and what have you, and it's
then this spike in cases.
Exactly. Yes, definitely.
And then what is it with the U.S. inventories jumping surprisingly? What's pushing them?
Well, now at least we're beginning to see the U.S. crude inventories recover from the Hurricane Ida and whatever, because when we had that Hurricane Ida and Nicholas storm, that affected U.S. oil infrastructure. And again, so basically this obviously led to dampened prospects for oil prices, and we saw that lead to a decline in oil prices. Aside from that, there are talks or potential talks about the Iranian oil deal. So that is coming on stream. At the point in time it was suspended around August, and now that thinking of revisiting the matter, it also definitely will impact on sentiment concerning oil, because once Iran is allowed to start exporting and its oil adds to the supply in the global market, that definitely would also depress oil prices.
And then do you see this affecting OPEC Plus, the allocation that's already there?
The ongoing quota. Well, they have a meeting in November, first week in November, so that should be that should hold sometime next week. It definitely will be one of the things they would consider. And OPEC has been cautious cautious in increasing its output increase, despite pressure from the U.S. and from other major oil players in the market. OPEC has been able to stand its ground and has been cautious about increasing it, maintaining just 400,000 barrels per day increase on a monthly basis. It would definitely be one of the considerations. It's unlikely for them to deviate from their plan because bear in mind that oil demand is still rising and the global oil demand compared to the supply market is still there. So we have a supply deficit. So despite what is happening now, the market is still heavily skewed to higher demand compared to the increase in supply. So I think OPEC will most likely still maintain its current course.
500,000. Yeah. So how do they affect all of this? How does it affect Nigeria?
Well, for Nigeria, well, all prices have slowed. $83 per barrel is still significantly over 100% higher than our budget benchmark. Yes. And for Nigeria, as long as oil prices remain high, it feeds back to us in terms of subsidy payments. We know that the federal government has come out to say that by second half of 2022, they're going to end payments of fuel subsidy. And some facts, one, all fuel imports account for about 30% of total forex spent on imports. Nigeria's petroleum products demand is about 15 million metric tons and is projected to increase to about 17 million metric tons by 2025. So definitely, if it has gotten to the point where the government has come to terms with the facts, we know that there's been that ongoing negotiation with Labour, and the government has also said that it only made provision for fuel subsidy just for the first half of 2022. So what does that mean for Nigeria? Once subsidies are removed, bear in mind that now even with the implementation of the Petroleum Industry Act, paying subsidies or fuel subsidies have actually become illegal. So what does that mean? Definitely
no, but the PIA does not directly abolish the payment of subsidy.
According to the PIA, you shouldn't be paying for subsidies. It's one of the conditions tied to the PIA. So the government knows that. So why we've seen this delay so far is because the government is trying to finalize or negotiate with Labour because of the impact on welfare of consumers, of the average Nigerian. Because now definitely we're going to start paying more for petrol.
And it's going to have a spillover effect.
It's going to have a spillover effect. But bear in mind that diesel is actually the fuel used by the trucks that actually commute or transport goods and services. Petrol is used more in urban cities or for urban transport. So, and diesel has been around 320, 325.
But you and I know that. I
yes.
mean, if petrol goes up 1 naira, it doesn't matter. It doesn't matter where they use diesel or where they use petrol.
I agree with you. So you're going to see that spillover effect in core inflation, which even based on September's inflation numbers increased to about 13.74, despite the fact that headline inflation declined. So we're going to see that. And the timing, I mean, why is the government waiting till second half of 2022? If you are going to remove him, as well remove it now, bite the bullet and
no, I guess we're not ready.
Well, yes, and I guess that.
And then you know, we're getting to the festive season.
Yeah.
Even so though I mean prices are not tapering in any way, so I really don't.
So I guess maybe they're considering, okay, let's try and finalize on these negotiations. Let's try and put in place some palliatives that would reduce the impact of this subsidy removal on the consumer.
So when we hear that the government is going to spend $7 billion on fuel subsidy in the next 12 months, I mean, June is less than 12 months. Why are we projecting for 12 months?
So it's the World Bank that actually came up with that forecast that like, if Nigeria continues in this trend and if oil prices continue to rise, that Nigeria could spend up to $7 billion on fuel subsidy in the next 12 months. And to put that in context, that's about 75% of the Eurobond issue that was raised in September, which was about $4 billion. If the government sticks to its guns and removes fuel subsidy by the end of June, then definitely that projection might not necessarily materialize. But it's a note of caution that, look, if you continue in this state and oil prices continue to rise, there's that possibility. And what does that mean? That means you have to borrow more because, like I compared it to the Eurobond proceeds, that means you have to borrow more. And the government has already projected about 6 trillion naira for borrowing in 2022. 4 trillion of that, so that's over 50%, will be used to fund outstanding debt obligations. So meaning that if fuel subsidies are not removed, or even for whatever reason, your debt financing would increase.
And then the more you have to budget for debt financing, the less you can do for capital expenditure, and the less infrastructure you can have, And then, of course, it reduces economic activities and revenue eventually.
It has that spillover effect. And bear in mind that right now, the government has been enjoying low interest rates, both in the domestic and the international market. But by 2022, a lot of global economies and their central banks are going to start normalizing monetary policy, meaning that they're going to stop quantitative easing, they're going to stop bond purchases, and then interest rates will start to increase, meaning the government will be spending more to service its debt, meaning that the revenue that is available for other key projects will be spent on debt. Right now...
And it's debt servicing.
Yes.
It's important to also note that we're not paying off...
Exactly. I was just about to compare that. Look, our debt to GDP is about... The ratio is about 35%. But if you compare it to the revenue, which is actually the main issue, it's over 70%.
Yes, as at August, it was 74%.
Exactly. That's high. So that ties up the necessary funds and investment for other sectors. So, and it's coming... This conversation is timely because everything is all about 2022. The same time, Dangote's refinery is expected to come on stream. And Dangote's refinery is about 650,000 barrels. The domestic refinery is about 450,000 barrels. If those can be brought back to functioning capacity, that brings our refining capacity to about 1.2 million barrels per day. But Nigeria requires about 1.5. So again, we need that investment.
And we hope Dangote would not be exporting, but to be servicing domestic demands. That's because, I mean, you can dictate, you know, for a company.
Definitely, all that will be resolved. And the most important thing is that as long as you can boost domestic refining capacity, then that addresses the issue of fuel imports. Then you don't need to spend as much to import fuel.
And then that also deals with the pressure on forex requirements and
forex supply issues.
Well, I guess we're waiting for Dangote.
Yes, so much, yes, so much.
Hopefully, we would see it come up, and then we would see the product. I mean, we already see the fertilizer on the area, so we do hope that we see that soon, and then it has the desired effect on the economy. Thank you so much, Damilola, for always being there and giving us details. So we'll just take a moment. When we come back, we'll head to the markets.